What is the S&P 500? Standard & Poor's 500 Index is a market capitalization index of the 500 leading public traded companies in the US. The average annualized return since its inception in 1928 to December 31st, 2021 is 11.82%. Basically, the S&P 500 measures how well the best 500 companies in the United States stock market perform. Why should you invest in the S&P 500? It is recommended for anyone that is looking for a safe and strong investment to purchase the S&P 500 ETF SPY. These are the reasons why. An annual return of 11.82% on your revenue. Diversification with the leading 500 companies in the US. Pays quarterly dividends. And finally, you don't have to worry about picking stocks. Prior history of the S&P 500. As you can see, sometimes the S&P 500 gives negative returns, but most of the time, you have positive returns. The following graph of the S&P 500 shows an uptrend from its inception. How inflation affects the returns. The orange line in the following graph is inflation rates. These rates come from the Federal Reserve. If inflation rates are high, past the 5% benchmark, then the S&P 500 tends to give negative returns. However, this is not always the case. Nevertheless, you should not run away from these opportunities to buy low, but embrace them and buy as many shares as you can. Where can you buy this ETF? Buying this ETF can be completed from most brokerage accounts. The strategy. You should buy SPY using dollar cost averaging. This simply means that you're buying the ETF on a set schedule, regardless if the price is up or down. For example, you buy $50 worth of SPY on a bi-weekly basis. Using dollar cost averaging will help you add more of the ETF without worrying about price fluctuation. Continue to buy the ETF for months and years, and when you need the money, sell a portion or most of the ETF to take out your profit. If you like this video, please subscribe, like, and follow.